We got some
Peace.
background music, son?
I wish. I don't know how to do it on. But peace, everybody. Um, this is your brother, Mr. Holipsism, the founder of the BAIO, in case nobody knew. And I got my brother
This is
Sensere rocking with us
AK,
today.
AKA, and this is a shout out to the information. So there's a shout out to him. So
But yo,
this is not self-aggrandizing.
just to let you know, you for some reason you're going in and out, like you go completely silent and then you'll kick back in. I don't know what's happening.
I wonder if I got a short in my headset or something.
Yeah, I'll let you know when it happens. I can hear you now, but at the beginning of what you just said, it was completely silent, and then you came in. But let me let them know what's going on here. The title of this live stream is Survivor Story: Income Contingency Plans. And I said in the description that Holip has a conversation with Sensere on keeping life from lifing, making sacrifices to ensure your family's security and prosperity, not fearing the insurance boogeyman, making the system pay like they weigh, but do it ethically. And I want to give you an opportunity to explain to the people what you mean by that. Oh, you're on mute, son. Your mic is muted. Hello? Can you hear me? Hello? Sincere, can you hear me? Because your mic is on mute. Hold on. Let's see. Something is going on here. And we were just talking and having a good time, and now all of a sudden I can't hear him. Let's see if we can overcome this. If you can hear me, go out and then come back in. If you can hear what I'm saying.
Okay, I said,
Oh, there you go.
yeah. So I can everyone hear me?
I can hear you now. Yeah, you're good.
Okay. So basically, I say making these sacrifices to make sure that your family doesn't suffer from a economic loss. We're getting to the point now where as people age, it's more likely than not that you have some event, even if it's not a event that you're permanently debilitated from, but it's just long enough to make it where if you go out of work for 15 days or a month where you're not earning income because you have a limited amount of PTO depending on your job, you have a limited amount of FMLA, and so it's good to have a backup plan, even if you have 6 to 8 to 12 months. Now, people who have extraordinary amounts of wealth, this is not necessarily a viable solution for this because they're probably making so much in interest from the bank that it doesn't even matter. But for the average person, because the statistics from the Federal Reserve indicate that the average person, which means the median, so on either side of that 50% line, only have $1,000 in the bank, right? Now, there's a lot of, you know, things that we spend money on that either don't necessarily benefit something as a supplemental insurance policy um is of I've have
Yeah, you're starting to break up.
okay, hold on. How's that?
Yeah, that's good.
With life without worrying about how am I going to be able to pay bills. So, for instance, I had to go into the hospital recently um, because I had this is the weirdest thing ever. I had a bacteria infection that attacked my lungs. That it's one of those infections that it's a bacteria that you may have as an infant, but you would normally recover pretty rapidly because you're newborn. But if you get it as an adult, it really compromises your health and your immune system to the point where like my oxygen saturation was below 50%. I had to get intubated. And so, I was in the hospital for 2 weeks straight with it. And so, as a result, you don't, unless you have a business where you have employees or something like that, or like say you have a job that has really, um, really good benefits, you won't have, income coming in. And so, this particular plan I have is through Chubb, which is a insurance company that does more business to business as opposed to business to consumer. And so with Chubb, they usually offer you this coverage through the banks, and then it's usually like a very simple questionnaire, not a whole lot of health underwriting. Um, and I mean, they may ask you questions about, I want to say, um, like cancer and diabetes, because those are two chronic conditions that they may not want to pay out a claim if you're like mismanaging. So, for instance, if you're constantly in the hospital because you like to eat uh pork chops every other day and drink on 40 ounces, they're not want they're not gonna want to fund that with good reason, right?
Right.
So you got gout, and instead of like you taking care of your foot then went from being a foot to a hoof, which is actually seen this on the show. My feet are killing me. Like people don't manage their diabetes the right way.
Wow.
The
Is
way
that
that they're
the
risk pooling.
the program that you're talking about? Is that the second thing you sent me? You want me to put that on the screen?
No, no, this is the one I have. They don't have like a brochure or anything. This is the
Oh,
one I
okay.
told you has to come through the bank.
Right.
And so, for instance, I got this through First Citizens Bank, which First Citizens Bank a lot of people don't know about. But First Citizens Bank is actually the bank that bought that. I don't know if you remember that first
You went out. You said the bank that brought what?
the Silicon Valley Bank.
Oh, okay.
They actually the ones that bought that bank. They've become extremely prosperous in it, but um they're actually a family owned bank out of North Carolina,
Hmm.
and they actually they're the ones that offer. But Chubb does business with multiple banks. Like I said, their thing is they rather deal with the business to business, and then let the whoever the institution is handle dealing with the consumer. Because what happens is usually you can get the coverage, and then what their bank will do is they'll collect the payment right for the insurance and transfer the money to um a third party. So in the case of like this particular coverage through Chubb, they have a third party administrator, Franklin Madison, that actually collects the payments, and then not to muddy the waters, but like there's actually a third party that handles the claim itself. So in the case of this particular coverage, um, when I had to, file the claim, which is you have to wait till you get out the hospital, and then what happened is it's a one-page claim form, and then there's a document that you get from the hospital called a UB4 or UB40, and that basically details the what they paid and like what your I guess your condition codes,
Hmm.
and then from there, like I was able to get a check inside of like 11, maybe 12 days for a lump sum because they paid me $300 a day for every day I was in the hospital,
Mm.
and so that's decent money. So now instead of me
Now,
having to get
is that what you use to make the payment to the hospital, or how did that work?
no, no, no. So that's the beauty of it. So it's a indemnity plan, so it comes to you directly.
Hmm.
Now, in the case of like my hospital, I actually have VA healthcare.
Okay.
So for people who don't know, for people who, some people actually, it's so funny. So for some people who may be veterans, this is now this works for me because I'm self-employed, and so because I'm self-employed, I used to have a individual healthcare plan, but with the VA healthcare, it is income based, and so what happens is I'm able to go in to the VA healthcare clinic with an appointment. But like, let's say I have a chronic situation or I have a emergency situation, I was able to go into the emergency room, and then within 72 hours, unless there's like dire circumstances, like for instance, in the case where I had to get intubated right away, they
Hmm.
made an allowance for me, but like they cover 100% of my health care. So like I went and recently I had to go back in for because like I said, I found out what one of my underlying issues was I was oxygen depleted. So in 72 hours, they cover 100% of my hospital bill.
Hmm.
Um, so the first yeah, I was getting ready to. We're going to talk about Aflac in just a minute too. So I'm glad Love and Naja brought that up. That's they're actually on the docket as well. So with the plan from Chubb, like I said, it's straight cash, and then they'll send it to you within usually, let's call it 2 weeks. You'll have cash in hand, so that way you can use that money instead of having to rely on savings. Because like I said, let's call a spade spade. The average family doesn't have $1,000 in a lot of cases
Right.
to cover things. So now people say, well, what about the cost? Well, in the case of for me, it was only like $27 a month. So that's
Mm.
nothing. You're talking less than $1 a day.
Now, the
So
program that you're talking about that you got that you said is not available to the public, this is not something that our listeners can get, right?
no, what I'm saying is that you have to go through the bank.
You have to get it through the bank.
Yeah,
Whatever
so
you.
what you want to do, for instance, Chubb does business with a lot of different banks. What
Mhm.
I would encourage people to do is to contact their bank, whoever they bank with, and ask to speak with someone. Like matter of fact, one of the tellers, or ask to speak to someone at one of the branches, or maybe going to the branch to investigate and ask them about the insurance benefits that are offered for uh, their members, because most banks have an insurance department, and tell them
Mhm.
that you're looking at a supplemental um, hospital indemnity plan, and they'll tell you if they offer or not, because it's like the people who work at the bank branch, that's kind of one of their deals, is that they're there to sell additional product. And so the bank is, because the banks usually act like almost like as an insurance agent, because they have a insurance license and they get a kickback off it. So
Mhm.
imagine they got 20 million customers and 1 million of them take advantage of that product. They're getting a commission off of that. So it's not like they're doing it for free. So if you talk to your bank, ask them if they have access, because tell them that you thought you saw one in the mail and that you wanted to investigate again, because they send these things, and it's one of those things that people they think is junk mail, But when you
Hmm.
get something from the bank, you should always look at it because it may be a benefit that not everyone can get access to unless they have a similar bank. Banks and credit unions send you a lot of stuff in the mail. So always look at it to see if you might be interested. Because, in this case, I definitely saw it and I was like, I had gotten one years ago. Matter of fact, when I was with another bank and I had thrown it away. And I said, the next time this thing comes in the mail, I'm going to get it. And I got it. And I've had it for several years since. Now,
Now, can
when
I
I,
ask you a question?
uh,
The banks would be considered a partner with them.
yeah, they're set up, the banks are set up as, because most banks have an insurance department. The
Hmm.
banks can collect a commission. So they're probably getting paid two ways. They're getting paid off of the policy itself, as
Hmm.
well as they're getting paid off of like any fund transfer fees that the insurance company pays them for transferring the money. Now, in my case, what I actually did with Franklin Madison, I actually send them my money directly. I actually send them instead of, because I don't, like I said, I'm not a fan of direct debit. So what I figured out how much it costs for the year, and I send in my premium in August for like $326, something like that,
Hmm.
whatever the annual cost is, and just be done with it. So that way I don't have to worry about it being direct debited and all that other stuff.
Hmm.
Um, so once again, it's great peace of mind knowing that you have this coverage. Now, if you want to have additional labor to wait layer, you have to do it a little bit more strategically. And let's talk about Aflac. Do you have the exhibit I sent you for Aflac?
Yeah, I have to bring it up. Hold on a second. Share my screen. The reason why I asked you that question is, wouldn't they Chubb have a list of banks that they're partnered with?
It's they don't publish it. That's the problem. They don't, because they don't deal with the consumer, so they wouldn't have a
Uh,
list of banks that's available for you to see. Um, because they, like I said, Chubb is funny. They just decided they just want to deal with the business. And that's, it's kind of one of those things. Rather than have to chase people down for payment on premium, they just kind of let the banks deal with it.
Now, which one did you want me to show, the Aflac or the other one?
Aflac, yeah.
Okay. Can you see it?
Okay, yeah. So let's talk a little bit about this particular plan. So what Aflac offers is similar but somewhat different. Um, they're sold as two separate plans. One is an accident insurance plan, and one is a critical care plan. Um, so the first one, self-explanatory. It's an accident policy. Now, the thing about this is that because this is cash to you, um, the accident type doesn't really matter. It just has to be. It can't. So in other words, it has to be something that's basically unplanned. Happenstance, and and the policy goes into effect. Um, so because basically what they're saying is they don't want you dropping a bowling ball on your own foot or mutilating yourself to try to get the money, right? Because people are stupid like that. I know it sounds crazy, but because what it is, they know that if the person has health insurance, right, a person can like set themselves up, and then they can go into the hospital, and the health insurance company's not going to ask any questions. They're just there to pay. And so they got these things set up. They do investigation. So that's why it's important to be a person that's uh not one that's gotten into a lot of trouble. Because here's the thing with some of these, I want to cover this whole. This is, I said don't take this personal or anyone, but like if you've had like a criminal past, it can preclude you from getting certain products because especially if it's like a crime resulting from fraud or anything like that, they're the insurance companies are risk averse. They're not going to want to place their bets on someone that they think may have done something that can ruin their risk pool, because the way these things kind of work, it requires that there's enough people paying into it who aren't going to use it to pay for when people do use it, right? So like so when they decided to take me on as a client, you know, they looked at the total situation, they approved it pretty much instantaneously, because I don't have a past. I don't have like a criminal past or anything like that, and I'm not a claims abuser, right?
So
Because they have
the key is to not be a criminal.
the keys not to be a criminal. No, 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 no Bishop Whiteheads. Yeah, no Bishop Whiteheads allowed. You know what I mean? Like you can't be a person that's always trying to find the jokes. You know what I mean? Because
Oh, you went out again, son. Hello?
can you hear me?
Oh, okay, I hear you now. You went out temporarily.
Okay. Yeah, I mean, because like for instance, one of the things that they have at their disposal as an insurance company, because most of these insurance companies operate in multiple lines from health to life, they have something called the Medical Information Bureau. So whether you like it or not, most health information, even though there's HIPAA, can be accessed in a cloud. And they do that so that way the insurance industry is protected against potential fraud. So they'll know if you've got like certain pre-existing conditions. Now, in the case of the first plan I talked to you about, because it's a specialty type product, the only things I remember on the questionnaire, and I don't have access to the questionnaire, it was literally like one or two things. I think cancer, and I think they asked about diabetes or high blood pressure. And I think, for instance, with high blood pressure and diabetes, if it's unregulated, which that's a problem, they probably exclude something pertaining to that. Cancer, even, I mean, and then if it's like long enough ago, if you had cancer 10 years ago, then it's irrelevant. But if you had cancer in the most recent, like 2 to 3 years, that might be a problem. In the case of this particular plan, what I tell people with Aflac, you want to, if you're going to go about getting coverage, get the Aflac first, and then get the indemnity plan from the bank second, because they do have a question typically that asks you if you have coverage already. And if you've already got coverage, they may not want to give you coverage with Aflac. So you get the coverage with Aflac first, and then get the coverage with the other one second. So, for instance, if you were to take out this coverage with Aflac, and this is based on me because the coverage may be different based on your gender and age, um, for you. But if you look at how much it costs, it's like 80, it's like $81, 80, call it 81.50 or whatever it is, right? And then you add in the other plan for $27. So you're talking about under $110, right? It's very affordable, right? Because you could be doing a whole lot of other things with $110, but that's really about $3.50 a day, right? So you know who's going to miss that. I mean, that's a Starbucks. It's half a pack of cigarettes, something that you probably don't need in the first place, right? But that's why I was thinking about the sacrifice part of it. Is like small amounts of money, but when an emergency comes up, it's there for you. Now, if you look at the benefits under this plan for the critical care, so 25,000 cash diagnosis benefit, and then they got different riders that you can have for an event recovery. So what these mean is that there's different ways that you can.
Oh, you went out again, son.
Hello.
Yeah, you went out again.
Okay. So the policy writers are additions to the policy that give you additional benefits for a charge, and basically it allows you to enjoy additional benefits under the plan.
Hmm.
So Aflac says that they get you cash within 10 days. Most of these policies are set up to get you cash inside of about a 2 week basis, right? So just be patient with it. You file a claim, and and here's the funny thing about it too. They don't call you back or anything. Like literally, like the first plan I was telling you about, I checked my mailbox and the check was there. So it might. So I don't necessarily check my mail every day. I think it was dated. It had already been there for 2 days. So they sent me money inside of like 9 days. So it's a great relief to know that you use these things the right way. You're not going to have to wait. Yeah. So Love and Nigel brought up a great point. Um, she said she has an extra health policy that could. Let me see. It doesn't come straight to me, but my medical bill $23 a month. Yeah, so this is a great point. So these plans I'm telling you about come direct to you. Traditional like health insurance that goes to your hospital. These come direct to you as income replacements. So that's the benefit of these plans is that it's there for you to cover your bills.
Right.
Because see, if you have a so the way health insurance works, right? Let's say for instance you have a health plan through your employer, right? And let's say that you have a $2,000 deductible for your family, right? Here's something a little known secret that people don't realize, right? So one of the purposes of health insurance is to cap cost, and so the health insurance has preset limits with your healthcare provider on what they'll pay on certain services.
Hmm.
So worst case scenario, let's say you get hospitalized for an extended period of time and there is a large deductible, you could use the money that you get from the indemnity plan to cover that. But here's the little dirty little secret, right? The $2,000 deductible, they can't really do anything to you as long as you put them on a payment plan for like 25 or $50 a month depending on your state. So rather than use, because you may have, because the thing is, what I don't want people to do is take the money from the indemnity plan that's going towards their bigger bills that are on their credit report, right? Like your car loans and your mortgage, and use that to cover your deductible. Because here's the thing, right? They changed something most recently last year or in the past 2 years in regards to medical bills and your credit report. They can't put anything on your credit report for 6 months now. So they changed the FCRA where if you have a medical bill, they have to go a whole 6 months before they can put anything in there. So what I would tell anyone who has like a high deductible plan through work or something, that you
Hmm.
contact the billing department, right? Find out, and you can get financial assistance. They have an option usually through your hospital for financial assistance. They now certain hospitals, depending on the city, get grants and stuff like that. A lot of people don't know this, but like all you have to do is contact them, and depending upon your income and your circumstances, you could get a grant to cover the deductible, or you could go on a small payment plan. So, for instance, once again, if you got a deductible and it's $2,000, you can say, hey, is there any financial assistance available to me, or is there a payment plan? And as long as you're paying them 25 or $50 a month, once you make what you do is you say, hey, let me go ahead and make a payment to you for 25 bucks. That stops them from being able to put anything in a credit report. So rather, and what I would do, I wouldn't wait till it's like month 3 or 4. Like the minute you get out the hospital, talk to them about your deductible, get with them about what might be available in your market for, either aid to pay off the deductible or some type of payment plan. And the minute you you make a electronic payment for 25 or $50, boom, stops in their tracks. They can't report it to your credit report at that point,
Hmm.
unless now unless you go a period of time without paying them, then that opens you up to that. But I don't want the money. Like in the case of this Aflac plan, let's say you did get ca- cashed out to 25 grand. Yeah, that would make sense for you to cover the full 2,000. But like on the case of the first one, like I said, let's say in the case of a 10-day hospitalization, it's going to give you $3,000. That $3,000 needs to probably go towards your your house payment, your rent, your car
Hmm.
payment, and food and stuff like that. So I
Right.
don't. So it's one of those little nuances. The only reason I know about some of this stuff, guys, is I was licensed in life and health. I used to sell for Blue Cross and Blue Shield, and so I'm kind of somewhat familiar with how hospital billing works to a certain degree. So yeah. So these first two plans are the most similar in terms of how stringent they are on underwriting. I want to say with the Aflac plan, they'll ask you a question about diabetes that may preclude you if you are diabetic.
Hmm.
Um, the last one, Holip, if you were to go to United Health, that's another plan that I sent you.
Oh, the second one.
Yeah,
Okay, hold on. I just had it up and didn't.
yeah, Love and Niger. They had to because it was affecting people's credit to the point where it was stopping people from being able to buy houses. Like you would have people with your medical collection. Matter of fact, so I was also a loan officer for 13 years, and so one of the things that would always come up um would be medical collections and the FHA underwriting guidelines. And most government loans will allow you to look past medical collections, especially if they were older than a year, because it was jamming people's credit up. And so it's one of those situations where the way that hospital billing works, there's a delay a lot of times with how long it takes before they get payment from the insurance companies like that. So I always tell people anytime you have a hospitalization, it makes sense for you to contact the billing department to find out if they've been in contact with your insurance company, and then to you know track the insurance company as well. I know people really want to believe that these things work seamlessly together, and they really don't. It's kind of disjointed, and so it becomes your responsibility to follow up. I hate to say it, but if you don't follow up, because for instance, when I had to go into the hospital for COVID several years back, and I literally had to end up following up with the VA and the hospital to make sure that they got their money. Because it was a little bit of a miscommunication, and just because it's my follow up, I was able to make sure that they wasn't going to try to stick me with a bill because I was like, I'm not paying Nathan. Call me Nathaniel because that's what you're gonna get, is Nathan.
I got
But
the screen up if you can see it.
yes, I see it. Thank you. And so let's talk a little bit about this plan with United Health. So for those who don't know it, United Health is probably top three in terms of healthcare. Like United Healthcare has some of the greatest benefit packages for employers. Because it's United Healthcare, Aetna, Cigna. Never really been a fan of Cigna, but United Healthcare really usually has a lot of the benefit packages. They also are in the market for indemnity plan. Now, they kind of seem counterintuitive, but it makes sense. But they're basically getting you on both ends because on the one hand, they're selling the health plan to the employer, and then they're also selling these individualized indemnity plans to cover an expense that they're not covering, right? So like in the case of a high deductible, you're using money from them to cover that, right? But they're charging a premium to do it. So like if you look at this first one, um, it offers you up to $1,000 a day for hospitalization. Now the difference with these plans is they are fully health underwritten because United Healthcare, they have a lot of exposure in terms of like how many people that are insured by them. I mean, I'm talking about United Healthcare might have every bit of 80 million lives.
Mm-hmm.
And when they say lives in the insurance industry, that's like actual people that fall under the insurance because United Healthcare, I mean, Fortune 20 companies, 20, Fortune 100 companies are, insured by United Healthcare. So they have an undue amount of exposure in the healthcare market. So they're going to protect themselves accordingly. So, you know, with them, they're going to do a good bit of health underwriting. Once again, they have access, especially if you've had like insurance through them, through an employer. They're going to see what kind of claims you've had and stuff like that. So they definitely will exclude, these guys definitely exclude for diabetics and certain heart conditions. But once again, they'll do the underwriting and let you know if they'll cover you or not. And I think they'll underwrite you with exclusions.
Mm-hmm.
So I know it's not fair, it seems like, but like they can still offer you coverage sometimes and say, okay, we'll offer you this hospital plan, but we're not going to cover you for this particular condition because it's the one carve out from when they did that the Affordable Care Act, like supplemental plans still can do health underwriting.
Mm-hmm.
And so as a result, they're just making sure that they don't have a bunch of situations where people who are chronically sick going into the hospital are, taking money away from their pool to cover people. Because the way these plans, like I said, kind of work, you got to have a large enough pool of people who don't get sick nearly as often in order to make it work.
Right.
So, um, the young lady that was on the screen, she brought up some good points. So it sounds like she's been uh, fortunate enough to get some good benefit out of these plans. Did she leave the screen?
No, she's still in the chat.
Okay. Yeah, so she was talking about the 90K in medical bills back in the 90s. I mean back when she was 22, excuse me. And so yeah, it can be hard to recover from. But even still, what she was talking about was the fact that she had a large sum of money that was put on her credit report. But once again, the credit reporting piece is one thing, but the ability to work with them has kind of always been there. A lot of people don't realize it's one of those things, lack of information. If you talk to the hospital, you gotta remember the hospitals, some of the hospitals are public, some of them are
Mm-hmm.
private. And so there's the hospitals get charity in some cases from the very wealthy. And so they get like money from endowments the same way that colleges do in some cases. And
Mm-hmm.
so if you contact them about financial support, they may have support available for you at this income. Like here in Charlotte, for instance, right? Charlotte is a two-horse town in terms of our healthcare system. We only, as large as Charlotte is, with close to 1 million people, there's Atrium Health and there's Novant Health. That's it inside of Charlotte. And so that's not including the other counties. Other counties have more competition in their healthcare complex, but
Mm-hmm.
in the Charlotte area, we only have two. And so Atrium Health has taken on kind of the public charter. So if you go to a hospital that's Atrium, you're more likely to see more like gunshot cases and Like whenever someone gets stabbed by their ex-boyfriend or something crazy, you'll see something more like that. Because they've taken on the public charter. They can't turn anyone away at Atrium.
Hmm.
Novant, well, no one can't turn anyone away, but they usually will end up transferring someone from Novant to Atrium if it's a more trauma case. And so what ends up happening is with regard to Atrium, someone who is indigent and poor, they have programs set up to cover certain things within their healthcare as long
Hmm.
as you meet certain provisos. So, for instance, like if a person is uh, doesn't have a lot of income and they have healthcare concerns, they look at the person's financial picture and they
Hmm.
figure out like what percentage of their income can they cover, and so therefore they can cover their healthcare costs affordably without damaging their credit. But worst case, like I said, scenario, if you let's say you go to the hospital and you don't have any coverage, you just got to contact the hospital and find, and they have to obligate to tell you. And if you check their websites, they'll also have the financial assistance portal or something that may be able to help you. So that's important because the one thing you don't want to be is, say, a person who's a homeowner and you don't have um, a health insurance plan and you have a large hospital bill, they can go after your private property if you don't address it. So by addressing it with them, like I said, even if it's a small amount of money, they can't do anything to you legally if you have a home and you're uncomfortable. So at this point, it's more about having 360 kind of protection. You want to make sure that you have some type of healthcare coverage, even if it's a high deductible plan. In
Right.
my case, because like I'm a veteran, I was afforded the opportunity to get coverage at no cost. Um, and so I don't know if there's anyone who had questions. I can't really answer anything specifically, to your cases first, like, hypotheticals, but like any questions about how the coverage works and, how to potentially obtain it. Because in the case of Aflac, you can contact them directly. Same thing with United Healthcare. In the case of the plans um for Chubb, like I said, you would have to contact your bank. In the case of the bank I went through, is First Citizens, but once again, Chubb does business with a lot of banks. So if you have Wells Fargo or Bank of America, I would contact them. They usually have insurance departments. You could go into the branch and
I'm
tell them
with
that
Chase.
yeah, I would ask them, hey, well, in the whole, with you being the union, they definitely have some type of coverage that you could get your hands on.
Yeah,
Just
I'm gonna
tell you,
ask the union. I'm gonna ask my because I bank with Chase, I bank with TD Bank, and I bank with One United Bank.
yeah,
So I can ask all three of them.
yeah. How's things been with One United? Because I've been kind of like, how's that? I mean, you probably don't see. And here's the thing. Now, for certain people, if you're not like how can I say this? I'm not an active bank user,
Hmm.
meaning that I don't use like debit cards. So I use my credit card to pay everything, and then I usually I have a bank account set up to that I pay the credit card. The reason I don't use debit cards is a security thing because
Hmm.
like whenever you use your debit card, you can expose it to like scammers and swipers.
Hmm.
So when I use a credit card, it allows me to keep my financial information private. And so by using, your debit card a lot, you have to manage your bank account a lot more closely, depending upon how much you keep in the bank, right? But like it's for me, it's just a practice I adopted years ago where I just use my credit cards, and then I collect points and stuff like that.
That's good to know. That's very good to know because I didn't know. I use my debit card, so you made me think about that because that
Yeah,
actually makes sense. Just use the credit card and then just pay it off.
yeah, because matter of fact, the guy from remember that movie Catch Me If You Can?
Hmm.
All right, I'm gonna send the clip. Uh, the guy Frank Abagnale, he talks about that. He said so. Um, he doesn't have a debit card. He only has. I think he says he has an ATM card, but he doesn't have a debit card. He doesn't really use it like that, and none of his
But
kids
what's the
do.
difference between an ATM card and I thought that was the same thing.
No, he says he doesn't use like he doesn't go into the store because usually like when you go to the ATM, you're going directly in, and you can still get scammed with those. But he doesn't use a debit card where he can make purchases at like a vendor where they can have like some type of swipe
Oh, okay.
access. Yeah,
He only uses it as his bank, basically. Like when he
yeah,
goes to ATM. All right, I
yeah,
got you.
yeah. And he talks about that like because if someone takes money from you, you're kind of screwed and you got to fight with the bank. But if they take money off a credit card, that's the bank's money. They're gonna if you say it's fraud, they're gonna go ahead. Like Chase is like known for this. They are really
Oh, they're
about
the
protecting.
best.
Yeah, they
Chase is the best. If you challenge them, I've never lost a challenge on Chase. Like if I say somebody took my money, they give it back to me immediately.
yeah, exactly.
They do not
So
play.
I mean, and I realize everyone doesn't have access to credit cards, but this is even more of a reason to get your
Well, I'm
credit
gonna
right.
start doing that from now on. Thank you for that info.
Yeah, you don't. Yeah, because if you leave your debit card out there, it could be a mess. Because if someone think about it, if someone's able to get access to your bank information through your debit card,
Hmm.
it's lights out. I mean, it's a nightmare. I mean, people because they can clean your account out.
Oh yeah.
So I just basically I have one card that I use for like points, and like they give me cash back points. Like in like a year's time, like I had almost $1,000 in cash back points. That's spendable cash,
Right.
and I just use it for everything. 'Cause they don't have different categories. They just give me 2 to 3% back cash back, and basically now. So here's the thing, right? Now here's the beauty of that. They say the average U.S. household only has $1,000. I
Hmm.
got $1,000 in just cash back points alone. So that means if I got an emergency, I could just hit that, right?
Yeah,
Without having to hit my so
that is so true, man. That is so
so
true. By having more activity on your credit card, you get those points.
you get the points, and like I said, it shows them that you have the ability to take on more. Like I said, it's not like I let like I might have a balance of about $1,400 right now, but I can pay it off right now.
Hmm.
And I always anytime I get the you know minimum payment notices, I always pay a couple $100, and then I pay like usually in two parts.
Right.
But like I said, hopefully this was valuable and informative for anyone who's listening. I don't know if anyone has a question or concern or
Not just
they
says
have
she collects the
experience.
points and gets plane tickets to the continent. Hey,
Hey,
if
I hear that.
anybody wants to come in, I put the link in the chat. If you want to ask a question, just put it in the chat room. We probably gonna be here to one, and if we don't get any questions or anything by one, we're gonna end the live.
Is
It's
there
only like
anyone
11 minutes.
is there anyone on there besides Love and Niger?
Yeah, people are watching. I can see that. The amount of people I don't know exactly, but people are definitely watching. Anybody has a question, put it in the chat room or click on that link and come into the live.
Oh, okay. I got to go to
The
the
chat.
YouTube channel.
Yeah, man. But thank you in advance for this. This is very cool. You always have like the good info.
Oh, you're welcome.
You always have that. I miss those shows you used to do.
Oh, you talking about on the Blog Talk days?
Hmm.
Yeah, yeah, yeah. Well, that's I wanted to, I wanted to talk about this because a lot of time black people we just, there's things that we may be paying for, we may be, we may be allocating money towards stuff that doesn't serve us, and so that's why I wanted to talk about this because I mean, for $120 something a month, you can basically have this thing in place, and then, like I said, if you do have an emergency, now you're sitting pretty because you got cash coming in. You're not rushed to go back to work right away.
Hmm.
And if especially if you're really conservative with your money, like this is money that might last you for 2 months, or it just goes back into your savings. Because like in the case of the plan I have, I've had it for like 2.5 years. So I got my money back and then some.
It's crazy, like how information is, because just that little thing you said about using your credit card instead of your debit card, that's a big deal that nobody even talks about.
Yeah, man.
Just little things like that, that if people knew, can make some improvements in their life. And yet you don't hear about it. That's why I'm glad we have these type of shows, so at least people can get the information and be informed. I'm interested in insurance anyway, like the different ways that wealthy people use insurance that we don't
Yes,
know about.
we can have a show about that in the future. Because that is a good topic because, like, for instance, like the Kennedys, the reason that they're so wealthy is because they used insurance with trust. Matter of fact, a lot of the reasons the insurance laws recently changed in the most recent 50 years is because of them. Because what they would do is they would have an insurance policy and then they'd get a big policy for the family. And
Hmm.
then what they would do is they would have a trust set up. And so the benefits from the insurance policy, they basically end up evading taxes. And
Hmm.
then they will take a portion of the proceeds from the insurance, pay off any liabilities, and then put money back into the markets to invest. And then they would take out a bigger policy for their successors. So let's
Hmm.
say, for instance, they got kids, they might take out a $25 million or $100 million policy on their children. Crazy sums of money, like, and they just keep putting it back into the family fortune. Like, what's her name? Carolyn Kennedy. One of the reasons she stopped pursuing being a senator in New York because she didn't want to have to explain how she's worth $400 million.
Hmm.
She's worth how's she worth $400 million? So she's worth $400 million is because John F. Kennedy, his dad was a known bootlegger. So they've always been rich. So his father used these insurance policies for the family.
Hmm.
But I'm gonna send you that hold on a second. Frank Abagnale.
I have a feeling I know what's going on. It's like knowing my audience, what they doing is they're gonna wait till this live ends and then they're gonna listen to it afterwards because they want to get all the info. So that's why nobody's really asking any questions right now, because I guess you already answered them.
Can I add this to a chat to the chat or into the studio? Let me see.
Oh, you sending me an email?
I'm trying to think if I could add this in.
Oh, into the chat room, like a link?
Yeah, let me go to the YouTube real quick. 'Cause I don't know if you could play this clip from Frank Abagnale so you can hear him.
Yeah, send it to me. Send it to my email.
Okay, hold on. Yeah, here, direct from the horse mouth. So this guy was the who the scammer from Catch Me If You Can.
Yeah.
Yeah, this is the guy right here. He basically went on to work for the feds. All right, I just sent it to you.
Okay. Just waiting.
So people can hear it from him. But yeah,
It's a YouTube clip?
yeah, it's a YouTube clip
Okay.
where he talks about why he uses his credit card instead of like debit cards and stuff.
He definitely don't look like Leo.
No, yeah, yeah. Leo DiCaprio played it when he was really young in the game, like
Let's
when he was like in his early 20s or late teens. But
see.
he's considered like one of them foremost um authorities on scams and stuff.
You see him? You see it?
Yeah, I can see him. Yeah.
Let me see if it plays. I hope y'all can hear it.
1992. So for about 25 years, I've been using a service. I think they charge me like $12 a month. The reason I like it, I can monitor my own credit. I don't need them. All they've given me for that $12 is the ability to go on my keyboard in a few strokes and bring up my credit reports instantly on my screen. And up on my screen comes all three reports: Equifax, Experian, TransUnion. At the top is my score for the moment of that day, what my credit score is at those three agencies. Then I can scroll down and look at my credit. And I can say to myself, I paid this car off like 4 months ago. They still show that I owe money to this bank. I'll correct that. And I can go all the way down and see every inquiry made on my credit. That's what we call hard and soft inquiries. And that's your employer checking your credit, the IRS checking your credit, your insurance company checking your credit, or a credit card you applied for, and they're checking your credit. So I really don't need them, but for a fee, they're also monitoring my credit as well. So they're checking my credit, and they're letting me know in real time if someone attempts to use my Social Security number to get a job, open a bank account, or whatever the case may be. So to me, it's worth using that. Now, one other tip I'll give you is I don't own a debit card. I've never owned one. I've never allowed my three sons to possess one. Certainly and truly the worst financial tool ever given to the American consumer. So a long time ago, I asked myself a simple question: how would I remove 99.9% of my personal liability like that? Because I really don't want to worry about all these things. So I use the safest form of payment that exists on the face of the earth, and that is a credit card. Credit card. Visa, MasterCard, American Express, Discover card. Not debit credit, but credit card. Every day of my life, I spend their money. I don't spend my money. My money sits in a money market account. It earns interest. Actually, nobody knows where it is because it's not exposed to anybody to find it. It's just sitting there. I go to the dry cleaner, I give them my card. I pick up the groceries, I give them my card. I put fuel in my boat on the weekend, I use my card. I pay the marina to keep my boat in the water all year long. They put the rent on my credit card. I travel all over the world. While I wait to get reimbursed, I use my credit card. If I need euros, I go to the ATM machine, I use my credit card. I'm not going to use my debit card to get euros overseas or pounds in Great Britain. And every day I use my card. And then if I pay the bill in full or part of the bill, my credit score goes up. So I'm building credit while I'm using that credit card. And if tomorrow, and I'll do everything to protect my information, but if tomorrow someone gets my card number and charges $1 million on my credit card by federal law, my liability is zero. I have no liability. So yes, I love to shop online. I don't use a special card. I just use my credit card. If they don't deliver the merchandise, if they deliver it and it's broken, if the host site I went to was fictitious to begin with, I have zero liability. When you use your debit card, every time you reach for it, you're exposing the money in your account. The only person who's going to get robbed is you. When you use your debit card, you could use it for the next 50 years, 20 times a day. You will not raise your credit score by that much. And of course, when you use your debit card, you are liable up to a certain amount, and it takes a while in order to get that debit card fixed. So when we do post investigations at breaches, and we say to someone, on your incident, what happened? Well, I was in Target, but I used a Visa card. So I don't know, nothing. They canceled my card the next day. 2 days later, FedEx sent me a new card, and that was the last I heard about it. What about you? And I used a debit card there that took $3,000 out of my checking account. It took me 2 months to get my money back while they said they were investigating. I had to pay my rent, had kids' tuition, everything. I couldn't pay it because they had my money. So I do it for that. So I had 3 sons that went off to college, and I said to them, I'm not giving you a debit card. I've actually applied for a credit card in your name. So it's your card. Of course, you're 18, you have no credit. So I guarantee the card. So as a guarantor of the card, 3 things take place. 1, the bill comes to me and I'm responsible for the bill. So if you spend a lot of time in the bar, I'm going to know that. 2, I set the limit on the card. So whatever I want you to spend each month is while you're at school, I'll set that limit. 3rd, every month that I pay the bill goes on your credit. So by the time you get out of college, you should be looking at a credit score of about 800. You want to buy a car, buy a house, buy a condo, you're not going to need me to do that. All 3 of my sons came out of college with grades, scores of around 800. One of the best things you can do for your kids is to teach them to learn to use credit early on and build credit in their name. Credit is a very important thing. 30 years ago, it only meant whether you got the car, you got the house. Today, everything is based on your credit. If a company hires you, they're going to check your credit. If you buy auto insurance, they're going to check your credit. You buy life insurance, they're going to check your credit. Everything is based on your credit. So you want to make sure that you maintain a good credit. And it's one of the best things you can do with your kids. Question?
Yeah. All right, Holip.
Boom. That's a mic drop right there.
Yeah.
So, man, thank you very much. I'm so happy you came on. We got to do this more often.
Yeah, like I said, we could come up with some more topics. I may have one for us to discuss here in I guess in the near future, because it's something that I showed you that I've been working on. I think is bearing some fruit finally. So we can discuss it sometime in the future. So once again, we thank everyone for listening in, and like I said, this is more about just spreading the information, so that way people can have a means of to create their own safety net. So
no doubt,
it was informative and valuable for everyone.
Thank you, everyone, for listening, and please check out the archive because there was a lot of information in here that I think you might find valuable. And on that note, peace out, y'all.
Peace.